Hi, how's it going everyone? My name is Henk and welcome back to the channel. So ethical investing has been gaining in popularity over the past couple of years. Now this gave rise to a huge increase in the number of ESG funds being created. Now these funds are the funds that choose company based on the environment, social and government criteria. In fact, sustainability-focused funds have reached more than $2 trillion under management in early this year. Now, in this video, I won't be discussing whether you should or shouldn't be investing in ESG funds, but I'm going to look at whether or not ESG funds actually give you good returns compared to their non-ESG counterparts, and the results may surprise you. So first of all, what are the criteria of an ESG fund? So the first criteria is environmental. So an ESG fund looks at the energy use of the company, the waste products and pollution that the company produces, and whether they treat their animals properly within the company. The second factor is the social criteria that the ESG funds look at. So social criteria can include, does the company work with the local community to make their local community better? And their worker relationships, including the health and benefits of the company workers, and the business partners that the company works with, and whether their business partners share the same value as the company itself. The next criteria is government. So with governance, we look at whether or not the company is transparent with what it's doing and it's not carrying out any shady or illegal activities in the background. In this video, I'm going to be comparing the normal non-ESG version of ETF with the ESG version of the ETF. And the example that I'm going to be using will be taken from ETFs from SmartShares. So first off, I'm going to be comparing the US 500 ETF with the symbol USF versus the US Equities ESG with symbol USA. And next up, I'll be comparing the Emerging Markets ETF versus the Emerging Markets ESG. And last but not least, I'll be looking at the Total World Fund ETF compared with the Global Equities ESG. So the older ones that I'm comparing will be the SmartShares ETF in this scenario. First up, we're comparing the SmartShares US 500 ETF with its ESG counterpart. So for the US 500 ETF, it's got a fund charge of 0.34%. Now, if we compare it with the US Equities ESG ETF, it also has a fund charge of 0.34%. If we look at the charts for the SmartShares US 500 ETF, we can overlay the ESG ETF on top of it and see how similar the two funds are. So when we overlay the two ETFs on top of each other, we can see that both ETFs pretty much mirror each other almost exactly, with the orange line being the ESG ETF. And the ESG ETF has actually had a slightly better return compared to just the SmartShares US 500 ETF. Next up, we'll be looking at the Emerging Markets ETF from SmartShares. So for the SmartShares Emerging Market ETF, it's got a fund charge of 0.59% compared to the Emerging Market Equities ESG ETF. It's also got a fund charge of 0.59%. So in terms of fund charge, both ETFs are the same. Now, if we look at the charts for the SmartShares Emerging Market ETF, we could also do the same thing and then overlay the Emerging Markets ESG on top of the SmartShares Emerging Market ETF. So if we align the two roughly to the start of the same period of time, we can actually see they both mirror each other once again. And again, with the orange line indicating the ESG version of the ETF, it actually pulls slightly ahead compared to the non-ESG version of the ETF. Finally, we're going to look at the total world ETF from SmartShares, and it's got a fund charge of 0.4% compared to the global equities ESG ETF, which has got a fund charge of 0.54%. So the ESG version of the global ETF from SmartShares has a slightly higher fund charge than the normal version. Here we're going to look at the SmartShares Total World ETF, and again we can overlay the ESG version of the ETF on top of it, and then we're going to align the start to the same time again. And as the same as the two examples before, both ETFs follow very closely to each other. But the ESG version again pulls slightly ahead compared to the non-ESG version. So what exactly does all of this mean? Now, there used to be this idea that bad companies such as casino companies or tobacco companies or weapons manufacturers, they are not constrained by these ethical concerns, and they can basically feed on people's addictions and habits so they can make more money. But what the graph shows that these bad companies don't actually make a huge difference compared to the ESG versions of these ETFs. The second thing that you have to realize is that not all ESGs are created equal. Now, there's many different ESG rating companies, such as Bloomberg services, and you also have the MSCI ESG rating service. So there's plenty of different ESG rating agencies out there. And just because a company scores good in one area, it doesn't necessarily mean that they would score good in another area of the on the ESG scale. The next thing that you have to realize is that a lot of times the ESG versions of an ETF may carry a slightly higher fee compared to the non-ESG versions. So which one to pick, it really depends on your own personal preference. The next thing that you have to realize is that a lot of times these ESG companies may potentially be less affected by a lot of the government regulations that aims to crack down on companies that produce maybe a lot of pollutions or a lot of waste, or how they treat their potential workers. So overall, what I have found is that having an ESG fund compared to their non-ESG fund does not actually affect the returns too much, and it certainly doesn't make it worse. Now, in some situations, the ESG versions do outperform the non-ESG versions. However, a lot of times the ESG versions of the ETF may carry a slightly higher fee. So ultimately, which one to choose is entirely dependent on you. And that's going to be it for this video. Links down below for the brokers that you can actually purchase some of these ESGs, and I will see you in the next video.